quietly look for it as I'm talking. So I'll find it throughout. So that's survey at the end. Okay. All right, guys, we're going to start the webinar. Good luck. Have fun. Hello, everyone. This is Laurence Hugo from Credit Mediation Service, and I'd like to welcome you to the webinar that we have today. This is the webinar around blockchain and the Dummies Guide for Blockchain. And this idea of Dummies Guide to Blockchain is Jeff Zalman's idea, and I think he was thinking about me when he was referencing the dummy. And it's probably just as well, because I can be a big dummy in this particular topic. So we've got a whole bunch of people coming in now. So we'll probably get started because we're going to deal with the tyranny of the clock, and we're going to wrap this up hopefully inside an hour, maybe hour 5 minutes. So once again, welcome everyone to this webinar. And this webinar has been a long time coming. Jeff, Mauro, our guests, and myself, we've been talking about this webinar for quite a few months, and we feel that it's a very important subject because the subject matter itself, we're realizing, will have profound and growing effects on all of our lives, not just in finance, but in other sectors of the community. Now, we decided to make this webinar a fireside chat as opposed to just a talking head. And so, and that way you're able to field the questions and get those burning questions answered by Mauro, who will be able to deal with that straight away for you. We're going to have a quick presentation by Mauro, let's say 10 minutes, just to build the foundation. And from there, we'll go on strictly with the fireside chat and a Q&A session. And so please feel free and welcome to put the questions onto the Q&A section of the Zoom. Now, I might add also, this is a very timely webinar on the topic because I've just read last couple of days, the Commonwealth Bank has made available their open banking system to mortgage brokers. And that will allow them to process their mortgage applications a lot easier and a lot faster, well, as the theory goes. So I'm very excited to help in this particular topic and help try to demystify some of this information around blockchain, AI, even cryptocurrency in the context of our finance community. Now, a couple of things. Firstly, as I mentioned, please put your questions at any time on the Q&A section, and we'll read those questions out as we go along. And as always, this is not financial advice, or it's not legal advice either. So please take note of that. So before we hear from Mauro, and before I introduce Mauro, I'd like to introduce you to the other man of the hour, and that's Jeff Zalman, who's joining myself and Mauro in this fireside chat. I'd like to read Jeff's very interesting bio. I have never really seen a bio like this before. It's quite colorful. So I'll just read it out. Jeff is the founding managing director of Trailblazer Finance. But there's a lot more to Jeff than meets the eye than this. Prior to creating Trailblazers Finance in 2011, Jeff ran and successfully sold several businesses, including serving as the inaugural CEO of Val Financial, which won the MFAA Wholesale Aggregator of the Year, no less, during his term in office. Jeff studied at the University of Witwatersrand. Sorry, Jeff, I know I butchered that. I really did. Witwatersrand in South Africa, and then read law at Oxford University in England, no less. After graduating, he joined Goldman Sachs, where he was trained on Wall Street, and then worked in their wealth management division in London. Jeff, welcome to the webinar. How are you doing, mate? Well,
Let me start by unmuting myself and thanking you for not only orchestrating, hosting, organizing, and arranging today, but for having me join you and Mauro in this chat. And thank you for that intro. Not all the people on this call and there are quite a lot of people on the call know you, Laurence. And whilst I have a bio, I want to add a personal element and reflection. In my 12 years of running Trailblazer Finance as its founder, we've come across a number of people who, for a variety of reasons, get themselves into financial hot water. And my late dad, who was a retired high court judge, said anybody who chooses to defend themselves in a matter chooses a fool for a client. Well, I can tell you, when you get yourself into hot water and you need to negotiate your way out of a problem, not only do you often lack the experience, but you also lack the emotional objectivity of what you can and can't ask for, what's reasonable, and how you'll be perceived. And I look for people that I would feel comfortable, not just in their experience, but in their ethics. Laurence ticks both of those boxes unbelievably. He's done this for 30 years. I've seen his demeanor. It's not just about trying to win one over on people, but actually to try to help and to do things in the right way. And it's not just in this area, it's reflected in, for 15 years, he's worked with Sydney Lifeline. And for those of you that know, that can be suicide prevention. That can be talking people off a cliff. So when you have to talk people off a financial cliff or a life cliff, it takes those same special skills. That's why I've got such a high regard for his ethics. That's why I personally joined. And of course, I joined because I was fascinated by Mauro, his knowledge, his acumen as a speaker, and the awards as a TEDx speaker. So as much as you guys are joining to listen, I'm doubly excited. So thank you for having me here. And over to you, Laurence.
Great to hear. Thank you, Jeff. Appreciate that. Now, I've got two burning questions. The first is you're an accomplished man. What's your morning routine look like?
Well, for the last 16 weeks, my morning routine has looked like getting out of bed at 5:15, getting on the road by about 5 to 6, and then I try to ride my bicycle for about an hour and a half with a pack of guys. In 3 weeks' time, I leave for America, and I hope to be riding a bicycle from San Francisco to San Diego for charity. It's just over 1,000 kilometers in 7 days, and to raise money for a little girl who, in the most disastrous of circumstances, had to undergo as a 9-year-old 17 operations, where they first removed her feet, then they removed her hands, then her arms and her legs, till she was basically a body with stumps. And I'm going to, please God, be able to raise enough money to buy her, together with my supporters, a set of arms. That's motivated my mornings and why I've been coming into the office a little later. I'm almost fully cooked now. I'm at that stage. So that's what most of my mornings have looked like for the last while, and will until I leave on the 12th of October.
Good on you, mate. And at the end of this webinar, we'd really appreciate if you can potentially let us know how we can link to donate to
Fantastic.
that.
We'll send through something. Thank you.
And super quick, tell us a little bit more about Trailblazers and what Trailblazers does.
What I came to see when I was running Val, which you mentioned, I was the founding inaugural CEO, was that our mortgage brokers ran good businesses, but they had no tangible assets. And as you'd know, Laurence, most of the Australian banks are asset lenders. If you've got property, if you've got hard assets, they're happy to give you a loan because they know they can repossess it. But what happens if you built a good business built on cash flows and you've got recurring revenues that come in? How do you monetize what we call that river of gold that flows through? And the classic example of that is financial professionals, mortgage brokers, financial planners, accountants, property managers, people who don't need to invest in pallet racking equipment and forklifts and trucks and buildings, but invest in building out businesses. They should be as bankable. And that was the proposition upon which we founded Trailblazer Finance 12 years ago. just to lend money to those types of professionals. We don't lend to everybody. We don't lend to consumers out there, but we lend to professionals who are either growing their businesses or want to make an acquisition, or who have hit a problem, just like your debt negotiation. Sometimes plumbers have leaking taps at home, and that's how we've built the business that we have today. That's what Trailblazer does. Hence the word trail, because we rely on recurring trail income.
Terrific. Thanks, Jeff. All right. Now, before I introduce Mauro, I've just launched a poll to gauge people's understanding of blockchain, AI, and even crypto. So just very quickly, if you can complete that poll for us, and that'll give us a good idea on where our head is on the level of self-awareness around blockchain. So the poll's coming in. We're getting some good numbers. So I have at this point, Mauro, this will be good for you to know. We've got how much knowledge, so very good, or okay, but I'd like to know more, or no more than what I read in industry articles. And finally, what's blockchain? So there's the 4 stages. Now we have 5% who will consider themselves very good. So that's good. That's interesting. And then we've got those who are around about 11% who say their knowledge of it is okay, but they'd like to know more. And then the vast bulk, 61%, no more than what we read in industry articles. And then finally, what's blockchain? Don't know anything, which I think will be part of my cohort, 21%. So there you go. All right, I'm just going to end that poll and we'll move on. So formally speaking, I'd like to now introduce Mauro and welcome him to the group. And I'll read his well-accomplished bio here. Mauro Caselini, CEO of the very curious company name of Archaeological and partner at Vision and is a seasoned professional with a strong background in banking, finance, blockchain, technology. He has held key leadership roles, including the CEO of Bitcoin Sui in Liechtenstein. Sui, is it Sui or Suis?
It's Swiss. It's like Swiss. The bank we had, Credit Suisse. It was Bitcoin Swiss. Yes.
Sorry, guys, and I know, Jeff, you spent time in Switzerland in the merchant banking side, so I'm completely butchering it today. And is the architect of the Bankfrix blockchain operations, the first bank of Europe to offer blockchain crypto offerings to its clients, and that of its own is a fantastic webinar content to do. Mauro's expertise and strategic vision have been instrumental in driving innovation and shaping the blockchain landscape in Europe. Now, with a bachelor degree in business administration and with executive MBA in strategy management, he brings those skills to us today. Now, Mauro is one of the done quite a bit of research behind who Mauro is. Now, he's one of the few go-to guys in the topic of financial blockchain crypto specialists in Europe. And if this is not enough, he's a TEDx speaker on this particular subject. And in my research, I discovered Mauro's sports of choice is the unlikely combination of bodybuilding and golf. Now, I'm guessing right now, Mauro, you're perfecting the Schwarzenegger swing, right? That's the swing where the ball doesn't land in the bush; it just goes straight through the bush, straight through the trees, and lands in the exact spot where you want it to go. It's very unlikely, and I'm sure Greg Norman is very envious of your pumping iron, the 9 iron on the golf course. Mauro, it's a pleasure to talk with you, mate, and welcome to the webinar.
It's a pleasure to be here. Thank you, both of you. I very much look forward, especially to the fireside chat. But as we also have a lot of people in the talk that are not experts in the topic and are definitely more on the I do not know the much side, I always like to start with a few slides that really give us the general understanding of what blockchain is. Because honestly, blockchain is in the end a boring technology, because it really just combines technology that is some part of it even out of the 70s, some of the 90s. Some things are a little bit newer, but in the end, the blockchain technology is a very interesting mix of boring technology that exists.
Ooh.
All right, Mauro, are you there, mate?
I think he'll come back. Yeah, there he is back. You're back.
There you are, mate.
Okay. Let me know if something should happen again. So it's really about these general topics. It's in the end about decentralization. It's about everyone can communicate with everyone. Therefore, also the peer-to-peer topic, so everyone can really directly send things to everyone. The topic of cryptography, as mentioned, that's from the 70s. Everything that we still do here nowadays is in the end all based on papers from the 70s. And that's a shock for me when I read that the first time. Consensus mechanisms is in the end just the way how transactions are approved. But now we dive a little bit deeper. So I think every one of you, more or less, especially in the mortgage area, knows a little bit how banking works. So we have different banks that, if they are lucky, can communicate with each other directly. But as soon as we leave, for instance, Australia, then definitely there is always a clearinghouse in between. There is always a central intermediary in between that takes record of all transactions. So there are a few huge banks in this world that know a lot, that know most of the transactions from specific clients. But if they run out of business, we have a huge risk, because these banks cannot communicate with each other anymore, because they need this big player in the middle. And on the right side, we see the goal of a future decentralized financial system where every single participant, and that could also be in a system just be banks, intermediaries, mortgage brokers, or whomever, who has in their database all transactions that happen in the chain. So if one player falls out, no one even cares, because all transactions are still there. The assets are still there because they moved. And these are the two major differences. Nowadays, this intermediary in the middle takes care of all transactions. And if this guy falls out, a lot of money is lost, because the money is with him in his accounts. In the new system, the money and the transactions informations are with all different players. And if one falls out, there is no problem at all. And the very simplified example is the international payment. And I think every one of you that is listening definitely made once a payment to Australia or to Europe, to the US, to Asia. And there we have the problem, because we are not in the same closed loop. We have correspondent banks involved. Normally 2, up to 3, or even more. So I'm Mauro Caselini, and I would like to send from my bank money to my friend in Australia or in the US. And that takes up to 2 days normally. It can even be way longer. Costs me about this $10 or way more. And it's horrible, because every single participant in the middle can block money, can run out of business, can ask stupid questions. And that takes ages and costs a lot of money. We are in a time where we can communicate with each other via WhatsApp, Zoom, or whatever, 24/7. But with the blockchain, with the payment world, we are blocked to payment times. We have long times, we are slow, it's horrible, and that needs to change. And how could that change? And here I, on purpose, do not speak about the blockchain, how we know it from Bitcoin. I speak about a little bit more closed loop, where we will have a blockchain where just intermediaries, banks, regulated providers are part of it, where they can finally communicate directly with each other. Therefore, they are faster. We still have the full overview of who can be part of it, and not everyone can be part of it. And I'm quite sure that parts of the financial system will end up in a way like that. We will have the Bitcoin and everything that is completely decentralized that everyone can use, but I'm more positive that the regulators will be that hard with all these systems that the major payment flows in this world will still happen through banks, but not through correspondent banks anymore, but through the technology of the blockchain. Another very important thing is the function, the hash function, the one-way hash function. And a really crazy example to explain it in the end is the chicken nugget. So a hash is the same like you have a chicken and you make a chicken nugget out of that. And that's quite easy to do. Every one of us could more or less do it. But to make, again, a chicken out of this chicken nugget, I think no one of us will be lucky. And exactly that's the point. You have an input like Fox. You use the hash function for this technology you use, also that quite old technology, and you will get out this text that is always the same size, but has completely different signs and everything. And if you just change here one word, the O word to where, you will have a completely different text. And everyone that gets this text and has the key to it to open it, he will be able to get back to the original text. But everyone that does not have this key will just get this text and will never be able to verify what's behind it. And that's also very interesting for fighting against fake content, because if you are the guy that verifies a transaction and you are, for instance, New York Times, you with your key can put this text into this digested version, and everyone that looks at it can, thanks to your public key, verify that you have done. So we have different parts in the blockchain technology that we will speak about that will be beneficial for the future. And also back, pretty simple example, how nowadays secure email communication also works, private public keys. We have that also in the blockchain. We have Bob. Bob would like to send a transaction, money, or whatsoever to Alice. Therefore, he uses Alice's address, Alice's public key. He uses his own private key. No one knows that, just him. And he closes down a transaction, sends it to a server. So that's, as we can see with this hash, a transaction, email, a communication no one can read. And Alice gets that. Everyone can get that, but no one can open it. Just Alice with her private key. So we have the combination of Bob's private key, so the key that just he has, Alice's public key, everyone can have that, and Alice's private key. And with this communication, we have a super secure way to communicate with each other, and blockchain combines these different things together that we use already nowadays.
Mauro,
so now we
question. Should
yes.
we be seeing a slide or anything that you have? I wasn't sure if you were referencing or it was just verbally you were describing Alice, because we're seeing you but not a slide.
Oh, I know, you should have seen slides the whole time. So there was something wrong. Let me shortly try it again.
I can see your slides, Mauro.
Okay.
So
you have seen the slides, but in the end we are now through. So if you have not seen the slides, that's not definitely good. But I think we should jump in the fireside chat.
Okay. All right. Excellent. Now, there's a few questions popping in. Jeff, did you want to ask the first question, or would you like me to get started?
I'd be happy to, Mauro, because when they look to that poll, I definitely wouldn't describe my knowledge as being at the top of it. So I as a finance guy, we're always scared of risk. And in our organization and in Australia, we've had so many theft of people's identity in the last year, and companies held to ransom, and people then contacted us. And there isn't a night when my phone that is on silent doesn't receive a bombardment of WhatsApp calls from countries all around the world, because I think I must be somewhere out in the dark web with my details. I'd like to understand about data security as it's growing in the finance industry, and generally, can blockchain technology be used to reduce data risks in this environment? And can you expound on that a little bit so that we can understand how it can potentially do that?
So there are different components that are here to be looked at. So definitely on one side, the good thing is if something is on a blockchain, it's always, as communicated here, hashed. So it's always in a code that just the people that should read it can read it, and you can share it with the people you would like to share it, and they get the access to it and no one else. But that's another thing that I would say blockchain is not solving, and that's the problem of the data, because the blockchain is perfect to send value from A to B, but you should not have too much information on the blockchain for various reasons, because the more data you have on it, the slower it will be, because it's stored on thousands of computers or servers in this world. We even hope in the future to have millions of computers or servers that store it. So if you have all the data on all these computers, it will be slow because all of them need to get the data. So from a data perspective, we have different things that are good and not good. So we have data on many computers. That's not good. So someone could attack it. It's all encrypted. That's good. So we are again secure. But again, if it's too much data, it's too slow. So I would say, especially where in this case, the blockchain technology will be amazing, is as mentioned by fake news or scams or whatsoever, that it can help to verify who is communicating with you. So just you will have an address that is called Jeff Zalman from Trailblazer. So no one else can fake this address and communicate with me, because I will always know, because you signed the communication, that it will be you. That can already be done also without the blockchain technology nowadays. But then again, we are back to centralized databases that can be attacked, that can be faked, and that are not up and running all the time. So I would say, if your data is out there, we have a problem, and it will still be out there, but we can make sure that just you will be the guy that can use your data to communicate with me. But still, if they have your data, they can call you, and blockchain does not change that.
Mm. And that also leads to my question. So what I'm hearing here is that there's huge benefits with blockchain, but then there's potential limitations. And I was thinking just the other day, and I wrote my question down here. In late last year, Australia's stock exchange, they abandoned their attempt to transfer their clearinghouse to blockchain-based platform. And in the consequence, they had to write off $250 million. And believe it or not, 7 years worth of work. Now, this blockchain has its critics, like the Google engineer, Kesley Hightower. He hasn't got very nice things to say about blockchain. Stephen Deal, he's a well-known technology blogger in the industry and author. He says that, I'll quote him right here. He says, crypto was, and this is in regards to crypto and blockchain, crypto was a project that wanted to remake money. Except many of the people who believe in this project didn't like banks, didn't like taxes, and they didn't like the government. And I know you got banking background, Mauro, so this is super relevant to pose this question to you. Now, recently, we witnessed the spectacular fall of the cryptocurrency billionaire, Sam Bankman, and his company, FTX. Now, is this technology, given all of that, is this technology a flash in the pan? And is this just another Dutch tulip bulb market that's just popping? Or are we experiencing industry growing pains? And what we're seeing here is just, it's a reinvention of the internet, or dare I say, the wheel.
There are many things you now mentioned. So first of all, I would definitely start with the Australian Stock Exchange thing. And it's interesting because I mentioned that project a lot to my students. And since about 6 years ago, I speak about that. And I always mention it, that I'm quite sure that they are doing a lot of things completely wrong and that this project will fail. And it now...
Oh, no. He's either thinking about the answer or we're having internet problems again.
I'm speaking.
There you are. We got you back.
It's good. Okay, no, I was speaking already a lot. So always let me know if something should not work. No, I speak about that project a lot because I mention it to my students for 6 years now, and I always mention that it's this system that they are building is completely broken and it will never work. Because they build it on a private blockchain, so on a blockchain that is really running just on a few servers in Australia. So that's in the normal database. That's what an IPM, whatever technology does. So they burned a lot of money, had a lot of consultants in it that knew that definitely from day one. but they were happy to charge them. So in the end, why should they tell you that it's wrong what you're doing if they get money? And we saw similar problems with European projects. And that's very interesting, was with the internet the same. The internet started with all these small intranets. And sometime they realized everyone needs to be connected. So they opened the internet and made some closed bubbles in it with passwords, with encryption, blah, blah, blah. Same happens with the blockchain. I'm quite sure that the worldwide financial system will end up on a decentralized blockchain like Ethereum. But on top of that, there will be closed loops where just they have access, as I mentioned, the banks. The next topic, where with the people that set up blockchain don't like banks and taxes. Also, that's partially true. Bitcoin was definitely a case that was used in the beginning for money laundering and drug buy stores and everything. It changed, and especially it's stupid to use, especially for instance, Bitcoin for illegal things to hide taxes and so on, because it's pseudo-anonymous. So if someone knows who is behind a public key, as mentioned, Alice or Bob, you know who it is. And if you make one failure in your system and you communicate with someone where you need to show who you are, the world can know it and the authorities can find it out, and forever, because blockchain never forgets. So also there, the case of Bitcoin is a completely different, because it's for me a store of value in a digital world compared to where we will see financial systems running on a decentralized database in the future. And you shortly mentioned FTX with Sam Bankman-Fried. And honestly, that was a traditional financial fraud that didn't happen on the blockchain. And that was the problem, because he had his own accounting system where nothing was in it. And he told everyone there are billions in it, and people trusted him. With the blockchain technology, everyone could have a proof that he has that money or not, because it would have been on the blockchain, and he, with one push of a button, every auditor or we or whomever should know it would have seen that there is no money. And therefore, I'm very positive that the blockchain technology will help to make the world more secure, to reduce risks that financial intermediaries fake things or are illicit parties.
Jeff, you're on mute, mate.
Mauro, following from that, I wanted to actually, on behalf of one of our viewers today, asked a question which I don't even begin to understand. Barry has asked us, governments around the world are pushing CBDCs. Maybe you can answer, how does blockchain fit into that system? And maybe you can start by explaining to the other listeners out there and viewers what a CBDC is, because Barry's already
with me. Yeah. So CBDCs are central bank digital currencies. So it's in the end a digital Australian dollar, a digital euro, a digital Swiss franc. It's just on a digital layer, and that does not have to be a blockchain, a digital representative of a national currencies. And I was very, very positive about CBDCs in the beginning. And the more I read about it, especially from professional research, the more I'm scared, because it can end up in the one bank world. So the national bank could give out Australian dollars, digital. Every one of you would have an Australian national bank account where they have CBDCs in their account. So for the loan, what do they need? Yes, we could use the blockchain technology and smart contracts. So do we need our bank? Not really. The national bank could do that. Okay, and now you do something that the national bank does not, or someone does not like. You drive too fast. And the police calls the national bank, and they will push a button and all of your assets will be blocked. So this world of this digital Australian dollar issued by a national government is very interesting, because everyone could have access to national bank or national money, very secure. On the other side, they have full power. They know what they do. And that's a risk. But I know where he's going to, because exactly the CBDCs are very often not built on blockchain technology, but other technologies. And therefore, I'm very positive that we will see two kinds of digital cash. One of them will be CBDCs issued by national banks and governments. And on the other side, we will see stable coins issued by private companies like PayPal, Google, or even banks, where they will make the same and issue digital money, but on a blockchain that can be used by everyone. But that's a topic we could speak 5 hours about it. It's huge.
So just on that, so in the old days, the banks made their money from interest on deposits. So you put a bunch of money in your bank account, and they'll generate income from that. The only game in town here in Australia, not sure if it's the same in Europe, in Australia is lending. All right, they're pushing that money out, particularly on secured loans. Now, so we're seeing a healthy evolution in the banking industry. Where's this going, though? You're in the bank, and the CEO of a bank is saying, this blockchain thing is going to send us bankrupt. We're going to evolve with this. How are you seeing the financial industry and the banking industry in Europe evolving around this, around blockchain?
Mm-hmm. So there, I definitely need to first jump in and to mention like where we even are in this blockchain world, because people speak a lot about it, but from a technology perspective, we are still at the beginning. If we compare it to the internet, we are nowadays in the blockchain world where we were with the internet in 1999. Google was just founded 1 year ago. So we see a lot and we see what all could be possible, but in the end, we know it will not work tomorrow, because there again, where is all the money from us? With the banks. What would need to happen that all this money moves to the blockchain? A lot. Therefore, the banks will still have a lot of power for a long time. Then we have the huge benefit for the banks, the regulators that also would like to have the finger on everything. And therefore, they also support that banks will still be the powerhouses in the future. But where I see the huge benefit, and that jumps also to the mortgage side, I'm quite sure that many intermediaries in the middle can be killed. I'm still very positive that I will hold my money with banks in the future because I trust my bank, and banks keep my money secure, more secure than I would do it with my own private key. And if I lose that, all the money is gone. So I'm very positive that we will end in a world where the banks still have the power to hold assets, but they can communicate faster with each other. And in a shiny, perfect world, even, for instance, land registry and other things would be on a blockchain. So all the things would just happen faster, but still the same. It will still be, I have the money in the bank account, the bank will use my money to give it to you, make money on that, and I get just a small amount of money, but all of that will faster, way more secure. And if a bad event happens in the world, and for instance, prices on the stock exchanges drop, whatever the hell, also there, the blockchain can react way faster, issue or sell securities based on intelligent contracts, digital contracts, smart contracts. So it will be the same. It will not be a reinvention of the wheel. It will just be a new technology, how it's happening all the time with the internet. We communicated with the internet. We are connected with the internet, and we do not even know how the technology works. And in the future, there will just be an additional layer, the blockchain for various things, and that's all.
Mauro, you've answered part one of a question asked by one of our viewers, Dan. Dan goes on to ask, and I don't know if you can see his question. Can you see the question? Maybe you could I'll repeat it. Dan says, second to that, given how many L1s and L2s there are, how does an industry participant decide which to build their platform on or just transact on and deal with gas fees, etc.? I think by gas fees, he's talking about utility and what you decide to use it for and what you don't. But I'll let you elaborate on the question.
And that's amazing what we can see here in this communication. So, Jeff, I'm quite sure you do not know what an L1 or L2 is.
Correct.
You also don't really know what this gas is. And that's exactly the point. But that's the point we have. And that's always interesting because in audience like that, we have people that are deep into the topic, and others just heard about Bitcoin and that Bitcoin was used for money laundering. And that's the point. And that's the very interesting thing. And here he speaks about L1 and L2. It's layer one technology for the communication and layer two, so something on top. And because Bitcoin, for instance, or Ethereum are so-called layer ones. They are slow, but very decentralized, and a lot of transactions or communication happens on them. And on top of that, we have layer twos that are like not that decentralized, but for instance, way faster than this original base technology. And many things do not need to be written in stone on a second or every 10 minutes. So some mortgage transactions, they do not need to be there after 10 minutes. It's enough if they are there after a day. But on a second layer, you have it real time. So also the banking system nowadays, banks work the whole day in their own system, and end of day, they settle with some banks. So once a day, they have a settlement, not more. And in the blockchain world, you can, in the end, do similar things. So we have the truth that everyone can see in this world. That's the layer one. And the layer two is, in the end, just faster for a specific use case, will therefore be also more cost efficient. So these gas fees are transaction fees. So for every transaction, you pay something. And there are L2s, layer twos out there. There are nearly free. There are completely free. And for specific use cases, that's important, because also everyone speaks about, with Bitcoin, everyone in this world has economical freedom. Yeah, but tell someone in Africa that he has to pay $2 for a transaction worth of 10 cents. And he will say, guys, that's 2 days work and I do not have the money. And therefore, there will be different technologies for different use cases. And I'm very positive that we will just see a few L1s, that's his point. So we will see Bitcoin, Ethereum, and a few others, but many L2s. So it's like the fundament is the L1, and the streets on top of it will be the L2s. And we will see many streets, many different streets for mortgage loans, for banking, for information exchange, for whatever the hell. And they will all be, from my perspective, in specific layer 2 technologies. So they will be built on top of that fundament and will be used for that specific use case.
So just extending on from the layer 1, layer 2, my next question, and I can see the passion, Mauro, that you have in this topic, and I'm so glad that we're talking about this. Let's just say I'm a mortgage broker, and I take myself and my briefcase to my client's house, and over a cup of coffee, I'm filling in an application form. Now, what is AI and blockchain? How does that impact that relationship I have with that consumer, my client, when I'm writing a mortgage and aiming to have it settled with the valuations done and the conveyancing and all that process, and then the ongoing relationship with my client? How does blockchain and AI come into all this?
So there are, again, this is a topic we could speak about 5 hours, but it's in the end really, really summarized. We could use the blockchain, first of all, for one thing, to share data with all involved parties. So we could put the blockchain from your clients on the blockchain, the data on the blockchain, and then just share the relevant information with the relevant parties. So the bank will most probably know the most. The guy that is selling you the object will just know with the name and that they have enough money. So they have a loan and they have their own equity they put in. The next one will just get whatever. The next one will get just an address. So it's like we can share with every participant the information he should get in real time. And if we change something, it will be updated real time. And therefore we can act way faster. You do not have to call 50 participants and tell them what they all need to know because something changed, because he now gets a higher loan, or the loan will be lower. And all of that could be on the blockchain. And the amazing thing would be, in the blockchain, we could add with central bank digital currencies or another digital cash representative the transaction. So if they have signed something that should need to be signed on both sides, even that could be made digitally, money will be paid. Land registry will be updated and so on. But we speak about a future that unfortunately is not there. But the first case could really be use this decentralized database to share the information that needs to be shared faster and way more secure.
But in saying that, though, I heard you say the other day in an interview that you can be, do I have this right? You can be banned from blockchain for under certain circumstances. How does that work?
I know what you're referring to, and it depends on which blockchain. On a CBDC blockchain, definitely you could. But in the blockchain we know nowadays, not really, because everyone has access to Bitcoin and Ethereum and everyone can use it. But there are companies that make chain analysis on top of that. They analyze the blockchain. And if they see that you are doing something that's not legit and should not be done, they will put you on a blacklist. You still can make transactions, but no legitimate counterparty will accept you. Every bank will know you are a red flag. you are involved in whatever bombing, you are a money launderer, you are this and that, they will never accept your money. And that's also the benefit of the blockchain. You cannot break the chain. In the traditional financial service, you send the money to another bank that accepts it, they send it to the next bank, and no one knows where the money came from. And on the blockchain, this connection will still be there. And for that, I would really, really jump in the question from Christopher, where he's like, CBDCs can stop you spending money if you leave your home beyond 5 kilometers, or stop you buying alcohol and cigarettes. And we see that in the end in China. China has issued a central bank digital currencies, and that's the problem on the other side. They have your social score. They know what you're doing. If you are a drug abuser, you will never be able to buy alcohol or whatsoever. If you should not leave your area, you will not be able to do it. If they would like that you save more money, they will put you a higher interest rate on your digital wallet than they will do for Laurence's your wallet, because you have billions in your wallet and they would like you to spend more, so they will charge you every day with 1% until you spend more. And I will get 1% a day because I'm poor and I need more money. So it's controllable money with all benefits and all problems. They can completely block you from everything, and they can allow you everything. And definitely Australia or Europe and the US, they will tell you, no, we will never do that. But how will the world look like in 10 years, in 15 years? Will it still be that democratic? We do not know. So that's also one of the reasons why I'm scared of a national bank or government-controlled way of money that is fully digitized. And that's why I strongly believe in Bitcoin, because it's the only digital way the only way to store value in a digital way, completely decentralized, because no one can block it. But as we now discussed, the counterparties can block me from accepting it. But in the end, as long as I, in the future, will live in this digital Bitcoin world, no one can take it away from me. I can send it to you, you can accept it, you can send me for that cash. Yeah, but CBDCs are dangerous, but in a democratic, free world, not that dangerous as we think. But the question is, how will this world look like in a few decades?
Mauro, that answer feeds beautifully into a question that Lester has asked about governance. We're used to having governance, whether it's ASIC or along sovereign boundaries, where Australia has its own regulators and then America has their own. What happens when you've got a technology that like this that has the potential to transcend any kind of sovereign boundaries, to go global the way that it is? Who regulates it, and how do you think that's going to play out, and who should regulate it to overcome some of those concerns that you highlighted about more autocratic countries like China? How do you see it playing?
Yeah, and there again, we go to the same problem as we always say, who should regulate what? And in the internet, we see it. Every country regulates it by themselves, but they regulate the users and the usage and not the technology. And that should also happen with the blockchain, because you cannot regulate technology, because technology can be set up by everyone and used by everyone. But the local governments or areas will be able to regulate it. For instance, in Europe, we have now a law in place that will be in play or effective as of I think January 1st, 2025. Yes, end of 2024 it is. And they regulate the markets in crypto asset regulation. So they regulate the full market of this crypto blockchain world all over Europe. But there again, people from the US, Asia, Australia can use it. So we have a problem. And until we have a global understanding and commitment on a high level of regulation and locally a specific regulation, it will be a problem and it cannot fly. That's also one of the reasons why it is not skyrocketing, why not everyone is using this technology, because everyone is scared to use it, because they do not know what their government will do. And yeah, in the end, that's the huge benefit of this technology, because in the internet, we share information with each other. And in the blockchain world, we share value on the internet with each other. And that's the additional layer that we now have with the blockchain. And the world is still not really ready for that. And therefore, it will take a lot of time until regulations are there. Big players trust the regulation and therefore will build use cases on top of that. And every one of us will use it. And the point there was one question in the end, the digital wallet, because it's a good link. Because I can set up on my smartphone or wherever a digital wallet and have this private key that I explained. If I lose that private key, that money is gone forever. If there are 10 billions on it, or 1 million or 1 Swiss franc, no one cares. The money is gone forever. And that's again a huge benefit and problem in the blockchain world, because no one can take it away from you. We will need providers, professional providers, for instance, that could be banks, that take care of your wallet. That you can push the button password forgotten, because otherwise everyone will lose money. And there will be regulated, compliant, good providers that will take care of our wallet. And we can then interact with it. And if we lose the key, we can get it again or get the password again. But the problem there is, if we do that, this centralized provider has power over our money. So if the regulator calls them up and says, you need to block Mauro's assets, they will do it. So we will end up in a world where people will have their own wallets, where if they use the key, it's gone. And they will have their wallets with the banks and regulated providers where no one can take it away. There will be a combination, and that's, again, economical freedom. Everyone can decide how he would like to do it. But personally, by myself, I will have a lot of assets on my own wallet, but definitely more assets on the wallet with the bank, because also especially what's happening if I die. My wife will not have access to my private key, or she knows how she gets access because I explained it to her and I wrote it down and I have it in a super safe, super securely stored, but it's complicated and a lot of money will be lost if people do not have access to their keys anymore.
Okay, that's good. And just extending on to that answer to that question, Louise asked this one, which is, you can see a lot of implications behind all of this when she's asked this question, but she asks, are you born with your own personalized key, like a tax file number? And how does this work globally?
Mm-hmm. There can definitely be completely different use cases. So in our central bank digital currencies, most probably you will have your public key that everyone will know that is something like your tax ID or whatsoever. In a blockchain world, you can set up millions of public keys and also millions of private keys, but that will be a little bit more complicated because you need to store all of them. But I, for instance, in the Bitcoin blockchain could send every one of you, we have here 74 participants still in the call, I could send every one of you a different public key and you could send me money and it would all end up in the back for me visible in the same wallet, but no one of you would know that these wallets are connected to each other. So we can generate as many public keys as we would like. But for instance, the interesting thing is, even if I produce 1 million public keys, I have access to them with my own one single private key. I can also set up different private keys, but that makes it more complicated.
Simon Lewis has got a really good question. He says, is there any finance companies using blockchain right now?
Mm-hmm. So, for instance, we have a lot of experiments happening in Europe and especially in Switzerland, where banks tokenized, so made assets digital. So in the end, shares and bonds, they put them on the blockchain and they are now working with each other on a blockchain to send them from A to B to trade them. In the end, a similar experiment that was done in Australia, but Australia blocked it or stopped it. Switzerland continued it, but also wasted a lot of money, and they're using it. On the other side, there are also some financial service providers in the international payment industry that started using blockchain, Dash and other chains to send money from A to B, because they realized that all these international payments, especially if you would like to send it to your families in Africa, Australia, Asia, or Southeast Asia, or wherever, it takes a lot of time. Western Union makes millions out of that, and that should not be the case. So many, but still smaller companies are building on top of that. And we now see that the bigger banks are taking over. And also there again, I'm very positive that some bigger banks will definitely win the race. And they saw now all these experiments. And if they use this layer, if, for instance, Western Union realizes that they could use that and could use the costs for the people a lot, but still make a lot of money, they will use it, because otherwise they will run out of business midterm, because there will be big financial service providers that will use blockchain technology to send money from A to B, especially in these developing countries, because their blockchain technology could be a huge benefit.
Mauro, I realize we're getting close to that bewitching hour, but Louise asked another good question, and maybe you can just talk a bit about how Bitcoin is mined and this whole thing of creating what I always call artificial scarcity. Is there a capped number of coins? How does it all fit together? Because I don't think that's well understood.
Yeah, exactly. So if you look at Bitcoin has or will never ever have more Bitcoin mined issued than 21 million. There are 21 million and there will be never one more. And for the use of value, from my perspective, that's amazing, because it's like gold. It's a limited amount is there, and if you hold it and is a request and demand, the price can go up. And that's my personal bet, and no investment advice and nothing, but that's my personal bet over the next decades, that there will be two possibilities from my perspective. Either way, there will no guy be there that would like to use Bitcoin or hold Bitcoin, or there will be many people that would like to hold Bitcoin. And we just looked at it, 21 million Bitcoin, and about 10% are already lost because people lost their private keys. So let us speak about 19 million in the end. And every millionaire in this world would like to have one Bitcoin. That will not work. So what will happen with the price? It should skyrocket. I could be completely wrong, but that's my bet over the next decades. And that's why I keep my Bitcoin in my wallet and I do not touch them, even whatever is happening with the price over the next 10 years, because I really bet on the case that in a digital world with central bank digital currencies, more and more controlled by governments, a decentralized value or coin, Bitcoin, that cannot be manipulated, taken away or whatsoever by any centralized party, can be worth a lot. And if I need to flee my country, I can have my Bitcoin with myself on a private key or on a key on my smartphone in my head, just remember the private key or whatsoever. But with 5 kilograms of gold already, that will be tough to flee my country. So it has many benefits from my perspective. And this 21 million blockage or maximum amount that is out there is, from my perspective, amazing for that use case. But on the other side, it will never be used for a lot of small transactions, because it makes no sense to use this asset for payments. It's store of value and not more, from my perspective. Some people see it different.
Very good, Mauro. That's wonderful. Thank you very much for that, and thank you so much for all that information that you've provided us. Now, if someone would like to reach out to you for some advice around this industry, how would they get hold of you?
Definitely. So a pretty easy way is definitely LinkedIn, or hopefully we also share email addresses after the call, because it's I'm always happy to help, always happy to speak about general things, but especially if you should have use cases on your side, more than happy to support you with my knowledge and the knowledge of my team and my partners at Vision End. But yeah, that's all. Like LinkedIn or email, I'm super available there, more or less, not 24/7, but 18 hours or 19 hours a day, definitely very well available.
Wonderful. I'd like to remind everyone, we're going to close off now. We're going to send out a survey, so please feel free to complete that survey, send it back to us, because we'd like to know if we're doing okay or we're not doing so okay, and that'll be very valuable feedback for us. Jeff, thanks very much for joining us. Invaluable questions, thank you. And Mauro Caselini, big thanks.
It was a pleasure. Thank you very much.
Have a great day, everyone.
Thank you, Laurence.
Thank you. Bye-bye.
Thank you, Mauro.
Take care, everyone. Bye-bye.
It was a pleasure, Chef Laurence.